What's up, everyone? It's Scotty with MoneyVest. So today we're going to be talking about Tesla and NIO, and Tesla once again coming in with yet another price cut. So far, I believe the first one of 2024, and NIO unfortunately breaking down a very critical area of support. So breaking down below $7, and it's not looking great for NIO as a company, and of course from a technical analysis standpoint as well. And that's exactly what we're going to talk about, and I'm going to break down in this video. As always, if you enjoy this video, find it helpful, make sure that you drop a like, and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos. You will be able to watch over 45 plus tutorials, educational videos, and this is all ad-free content, including all the spreadsheets with my fair values, my watch list, and 20 plus Discord channels, including trade alerts, binds alerts, options alerts, and trade ideas. Everything is going to be included with a link down below. So this right here is also, do connect with me on Instagram, by the way. Handle is going to be CAS@WRP. And now moving over to the catalyst that just came out an hour ago. Tesla slashes car prices across Europe after similar cuts in China as well. And we do have pre-market Tesla shares slightly down a little bit over 1%. So 1.6% is where we are, back down to $216. And a lot of Chinese manufacturers are also getting that pressure on price cuts. And XPeng is down over 7% right now. Li Auto is even lower, a little bit over 4.5%. And NIO also selling off over 6%, actually down almost 4% now, trading down to $6.29. So Tesla on late Tuesday trimmed prices for its Model Y cars across several countries in Europe, a week after announcing similar price cuts for its Model 3 and Model Y cars in China. And the company reduced prices on its cars sold in Germany, France, Norway, and the Netherlands, according to the data from the local version of the firm's website. And of course, in Germany, the Model Y rear-wheel drive model now sells for almost 42,990 euros, which is just over 46,760, making roughly a 4.2% discount on the car's previous retail value. And the Model Y long range now costs just under 50,000 euros. That's down 8.1% from the previous price point as well. So as we know, as prices get lowered, revenue is going to be a little bit lower. I mean, Tesla really will have to make up for the lost revenue in volume, but it's really, the volume is not going to be enough to offset the margin compression that Tesla is going to go through. And that's been the biggest concern. That has already been the biggest factor, which is driving the stock price lower over the last several months, because there's been a big concern that Tesla's margins are going down, which is indeed true. We have seen margin compression in reality over the last 4 to 6 quarters for Tesla. And as a result, we are now under 10% in those margins for the company. And in my opinion, I think the fourth quarter of 2023 and possibly could be the first quarter of 2024 is when we can kind of expect the bottoming out of those margins, kind of like the bottom, and then it starts to push back higher. Like this, in the next couple of quarters, like fourth quarter 23 and first quarter 24 is when I expect the trough of those margins to get hit, and for us to start that recovery back up and start moving back upwards for those margins for Tesla. But of course, in the meantime, that's certainly going to be affecting the overall earnings, the profitability, and as a result, the stock price is going to take a beating on this factor as well. And we also learned that Tesla, when it comes to AI and robotics, Elon Musk mentioned that, he can make Tesla the biggest company in terms of market share unless he controls a good voting power of 25+% shares. And right now, of course, his ownership is just a little bit over 13%. If he does exercise his options to buy shares of Tesla at over $6 per share, then of course it ends up being at around, I think, 22%, 23%. He'll still be a little bit short of what he needs to control the board, and of course in terms of those voting power to have that as well. So he definitely needs a little bit more, of course, to go over and make Tesla into a big AI and robotics company in the world. So that's again for a different video, different discussion, but bottom line is Tesla cutting prices, once again creating a little bit of that negative catalyst. Stocks down over 1.7% once again. Now, when it comes to NIO, I don't even know where to begin, because NIO we've been calling for this for weeks and months. I've been talking about this for months now, that NIO's execution is abysmal. It is absolutely terrible the way the company is being run, and they need to do something to focus on profitability. Focus on actually generating positive cash flows and net profits. If the company cannot do that and won't do that, there's just no way NIO is going to be around for the long term, regardless of how much support they can garner from the CCP. We know that a lot of these auto manufacturers over in China are being supported by the Chinese government. That's totally fine. But for long-term success, these companies need to focus on profitability. Li Auto has done an incredible job in being profitable. That's why it's not in such a bad situation compared to NIO. It's somewhat decent in terms of those margins. Last 3 to 4 quarters done really well, and XPeng is on a whole different level. I mean, it's done it's done not that great compared to of course Li Auto, but NIO has been even worse. I mean, you can see that with the stock price, with the profitability absolutely non-existent, and the companies. I mean, I can't even. I've lost count. I've seriously lost count to how many models NIO has launched. Like, I really don't know. Like, at this point, how many models of NIO vehicles are already out there? There's so many. There's so many that they've tried to launch, and it's gone to a point where, as I've mentioned time and time again before, over and over again, that NIO needs to focus on profitability and positive cash flows. Do what's essential, do less, but do effectively. Do less, but do that effectively. Instead of doing a lot and not really focusing on anything, do less, but do that whatever less you're doing effectively and make it, your high priority. So that again is going to be very important. So NIO stock price drops analysis that breaks key support. So again, if you come back to the entire technical analysis, as unfortunate as it is, we are starting to break down below a very key area of support of $7.30, and it's down a little bit over $1 per share from those levels. And as unfortunate as it is, there is no support in sight until coming down to low 560s, 550s. That is going to be that next target, and that support kind of in line with this previous area of support here, and this previous resistance, and that is going to be that next level to watch for NIO. And of course, it is incredibly oversold right now. So I'm of course underwater. It's a very small position in my portfolio. Thankfully, never really took a big position in the stock, but the idea is that, of course, this was a stock that we expected that is going to achieve some level of profitability by 2023, 2024, at least some quarters. The company is going to be able to focus the right way and, of course, be able to generate some profitability, but that never really happened, and that's what's disappointing about NIO. Balance sheet's still decent. Revenues are still growing. Deliveries are still up, but it's just the margins, the battery as a service, again, profitability, the lack of profitability, lack of focus really has what's caused NIO to continue to drop aggressively as it has, and from its highs of well over $57 per share, it is now down over 90%. So very, very poor performance from the stock, and you just can't sugarcoat this. Like, regardless of how you feel about NIO stock, I mean, the company, I mean, these are the numbers. This is what the reality is, and we just cannot sugarcoat this. I can sit here and tell you, give you all the excuses in the world, but that's not going to tell you the whole story. The story is the lack of focus, too many things doing them at the same time, not focusing on profitability, not focusing on generating cash flows, is really what's caused the stock price to sell off like it is. Support level is going to stay put down to 560. Like I said, that's going to be the next target, and resistance now at $7.30. And when it comes to Tesla, we're seeing a very nice support level now, sitting roughly at around inside this green rectangle. So that is going to be that support level, sitting roughly at 220s, 215s, so low 200s is going to be that level to watch. Of course, resistance all the way up to this lower high at 250s, and a much stronger support sitting roughly in the low 200s. So 195 close to 200 is where Tesla's support is going to be. But margin compression is potentially going to continue for the company, which is going to create some more negative sentiment around the stock. So hope you guys enjoyed this video and found it helpful. Let me know your thoughts down in the comment section below for both Tesla and NIO. And what are you planning to do? Are you buying, selling, or holding these two stocks? As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, again, links to our Discord and Patreon is going to be down below. Do connect with me on Instagram as well. My handle is going to be CastWRP, and that 16% annual discount is available for a few more days. I've opened up a couple more spots. And as always, happy investing. I'll see you all in the next video.